All right, today we're going to tackle a topic that can feel, well, super complicated from the outside, the stock market. But our goal here is really simple. We're going to cut through all that confusing jargon and give you the absolute basics. So let's get right into it.
So, have you ever turned on the financial news and just felt like you were trying to crack some kind of secret code? If you have, trust me, you are not alone. It feels like this world is built on jargon designed to be intimidating. But by the end of this, you'll have the key to understanding it.
I mean, you hear about bulls and bears, and you start to wonder, wait, did I tune into a nature documentary by mistake? That feeling of confusion is totally normal. And I promise by the time we're done, terms just like these are going to be crystal clear. Okay, so here's our game plan for today. First, we'll talk about why you should even care about stocks in the first place. Then we'll get into what a stock actually is. We'll imagine it all happening in a giant supermarket. We'll learn some of the language, and then we'll wrap up with the single most important rule every beginner needs to know. Let's jump in. So first things first, why even bother with the stock market at all, right? Why not just stash your money in a savings account where it's safe? Let's dig into the real motivation here. Well, the number one reason, honestly, is something called inflation. You know, that sneaky thing that makes the money in your savings account worth a little less each year. Investing is all about giving your money a chance to grow faster than inflation. But it's actually more than that. When you buy a stock, you're not just playing a numbers game. You're literally buying a small piece of a real company. You become a part owner, and you get to share in its future success. Okay, so we've been throwing around this word stock a lot, but what is it really? Like, what are you actually buying when you see those letters and numbers on a screen? Let's strip away all the complexity. Think of it this way. At its absolute simplest, a share of stock is just a tiny, tiny piece of a company. If a company has 1,000,000 shares out there and you buy just one, you literally own 1/1,000,000th of that entire business. That makes you a shareholder, a part owner. That's the whole idea right there. Now, to make things just a little more interesting, it turns out there are a couple of different flavors of stock. Most people own what's called common stock. This is the stuff that gives you a voice, you get to vote on big company decisions. But then there's also preferred stock. With this type, you usually give up your right to vote, but in exchange, you get moved to the front of the line for getting paid from the company's profits. Okay, great. So you own a piece of a company, but where do you go to buy it or sell it? To really get a handle on this, let's use a super simple analogy that I think you'll find helpful. This quote really hits the nail on the head. The stock market is basically a giant financial supermarket, but instead of filling your cart with groceries, you're shopping for shares in all kinds of different companies. It's just a big, organized marketplace for all this buying and selling. So how does a company's stock get onto the shelves of this supermarket in the first place? Well, it all starts when a private company decides it wants to grow bigger. To do that, it goes public through something called an IPO. That's the very first time it offers its shares to the public. And once those shares are listed on an exchange, our supermarket, then people like you and me can start buying and selling them from each other. And that last part, buying the shares, well, that's like the checkout process. In the stock market, you use a broker. They're like the checkout lane that takes your order and makes sure the whole transaction goes through smoothly. See? It's a simple analogy, but it really works. All right, we've got the why, the what, and the where down. Now it's time for the fun part, decoding that secret language. Once you know a few key terms, you'll be able to follow along with what everyone's talking about. First up, the two big animals on the scene, the bull and the bear. A bull market is when prices are generally on the rise and people are feeling pretty optimistic. Just think of a bull thrusting its horns up. A bear market is the exact opposite. Prices are falling and people are pessimistic. Think of a bear swiping its big paws down. Simple, right? You hear it all the time on the news, right? The market was up today. But what is the market? Well, they're usually talking about an index. An index just bundles together a big group of important stocks, like the Sensex or the Nifty 50, and tracks how they're doing as a whole. It's like a quick snapshot of the entire market's mood. Next up, volatility. This one sounds complicated, but it's not. It's really just a word for how bumpy the ride is. A stock with low volatility is like a smooth, calm cruise. High volatility? That's a roller coaster with huge, rapid swings up and down. It's just a way to talk about how risky or unpredictable a stock's price might be. And let's do a quick refresher on IPO. Remember our supermarket? The initial public offering, or IPO, is that big grand opening day.
It's the moment a private company puts its shares on the public shelves for the very first time to raise money and grow its business.
Whew, okay, we've covered a ton of ground. But hang on, because there's one final, absolutely critical concept that every single person starting out needs to know. Seriously, this is the big one. This is your foundation for everything else. And that word is diversification. It sounds a little bit like financial jargon, I know, but the idea behind it is incredibly simple and powerful. It's the number one tool you have for managing risk. So what on earth does it actually mean? It really all boils down to that old saying, don't put all your eggs in one basket. It's just common sense, right? It means spreading your money around. So maybe you own some stocks, but you also own some bonds, which are generally more stable. You could invest in different industries or even in different countries. The whole idea is that if one part of your investment portfolio has a bad year, the other parts can help balance it out. It's about creating a safety net for your money. And just like that, you've got the basics. The stock market's secret language? Not so secret anymore. You know the why, the what, the where, and the most important first rule. You're armed with the fundamentals. And that really just leaves one final question, maybe the most important one of all. What's the very first question you should be asking yourself before you even think about investing your first dollar?